Do you think, Tiffany, that the market has started pricing in a taper or scaling back of the $120 billion in extraordinary stimulus that the Fed is buying in assets? Has that started?
Quite possibly. And that really is the big question, right? The Fed has said repeatedly that they are, not even thinking about a tapering. But, you have to kind of think with the economy, with things doing so well, can they continue to stimulate? So I think a little bit of that is going on. I think the market is starting to price in a little bit of that. It's as an investor, as a professional investor, I kind of wonder how long can the Fed keep this up?
Let's get to the first earnings report of the hour. Dropbox, and Deirdre Bosa's got the numbers. Dee.
Hey, Wilf, I'm seeing beats across the board here. Revenue coming in at $512 million versus $505, which the street was expecting. That's up 12% year over year. Earnings per share, 35 cents versus 31 cents expected. ARPU, average revenue per user, that is also better than expected at $132.55. ARR, annual recurring revenue, which they have been releasing over the past year or so, coming in at $2.11 billion. Also a beat. Paid users, this was a key metric to look for, coming in at 15.83 million. That's better than the 15.7 expected. We will get guidance on the call. We will listen out for that. And keep in mind, shares are up about 10% this year so far, up nearly 2% in the after hours. Back to you.
Dee, thanks so much for that. Tiffany, Dropbox, what's your take?
Yeah, absolutely. I really expected that, and we're very happy to hear those results. They have a highly sustainable business model, and then what I also like the fact that nearly 50% of their revenue is generated from customers outside of the U.S. They generate revenue entirely from the sale of subscriptions to its platform, and I think that in this day and age, as companies are really figuring out work from home, work from anywhere, there's always a need for a service like Dropbox, no matter where they're working.
Shepard Smith here. Thanks for watching CNBC on YouTube.